Welcome to Sunday Investing. And we have Mr. Gaurav Kejriwal today, the Chairman and Managing Director of Highness Microelectronics Limited. How are you, sir?
Good, thank you. Thanks for having me on the show.
Sir, first of all, we would like to understand, your journey towards Highness and what came through your mind to start this business.
Well, as you can already see, this company was formed and started in 2007. But honestly, my journey with the display started much before that. And this is the time when the India market for displays was not really ready, and a lot of people were still using those bulky CRT monitors. But I was always fascinated with these thin LCD displays, and I knew that it was only a matter of time before these LCD displays will come in India. So I started with simple trading of these displays. I was getting them from Taiwan and China and Korea at that time. But over a period of time, I realized that it will be very important if we do some value addition, and therefore we transition to assembling these displays. But again, the market matured very quickly, and market evolved. And now here we are, where there is a lot of push for indigenization, localization of electronics, semiconductors, displays in India. And because we've had this long experience of the market as well as the product, we've seen the technology evolve from where it was till what it is today. So here, we have taken that bold step of manufacturing these displays in India, and we find ourselves really rightly placed for this.
So actually, I was looking that a company, the journey had started in 2007. And that time, the LCD as a concept in India was, very immature. So, it was very, very rare. So what sparked this idea कि, मुझे इस segment में this kind of a business जाना. Yes, the products and the verticals might have got enhanced as per the time going, but ऐसा दिमाग में क्या spark था कि मुझे ये start करना है?
So interesting question. Those times were the times when people were using those bulky PCs and computers. But I got fascinated with the laptops, and I saw laptops as a great computing as well as utility tool. And what made laptops so fancy was those thin screens. Its form factor, and from there my fascination for these screens started, and that's how that the journey began, because eventually laptop became commoditized, and everybody started having one. But the technology advanced in screens, and now from TFT LCD, like pure age old LCDs, now we have LEDs, we have OLEDs, we have micro and mini LEDs. So there is a very fast evolution, and the way this industry has been changing is in itself very fascinating to me.
So before jumping on the business model, the name Highness Microelectronics itself is very interesting. So what is the backstory behind this name?
Well, when you do a lot of innovation, when you do a lot of new things, when you play around with the technology, it gives you a feeling of highness. So that's what we enjoy in day to day. We take the name of Highness as Highness Microelectronics. So we play around technology, we play around new things here and there, and it gives us that feeling of highness.
Okay, great to know, sir. So now let's jump on the business model. So what kind of products do you make in what kind of sectors are we present? So, explain us your overall, basket or portfolio of the products.
So first, I can tell you that our products are broadly categorized into two main categories. We offer raw TFT LCD modules or display controllers or touchscreens. Now, these raw products are taken by a lot of system integrators or assemblers or aggregators who use our display TFTs to make monitors, or in other words, to make finished products or integrate in their products. The other side of the offering is finished products in form of monitors. Now, these monitors are meant for various markets or verticals or segments, I'd say. So Highness operates in four major industry segments. Starting, we make industrial automation displays, which are used in a lot of automation machines like textile weaving, spinning machines, embroidery machines, displays that are used in CNC machines, etc. The next segment that we operate is in defense and surveillance and aerospace. Now, these are very, very mission critical and extremely challenging environmental condition displays, which are customized to withstand extreme climatic conditions like -40 operating temperature and night vision capabilities, airworthiness, etc. Then we have displays that are used in transportation segment like metros, trains, long distance trains, etc. Now, these displays are either placed in the passenger cabin where passenger gets to see some journey related information, or they are used on a driver desk as known as driver display units, wherein the train operator gets some critical information about operating the train. As well as we have displays that are placed on the platform where train arrival departure information is shown, or displays that are placed on the gates where you use your RFID card to get in or come out. So that's our display portfolio for trains and transportation segment. Lastly, we have displays that are meant for use in medical and healthcare segment. So we are manufacturers of surgical monitors which are used inside an operation theater, or displays that are used when a doctor performs critical surgeries like endoscopy, laparoscopy, etc. These are really those displays where doctor depends on them when performing a surgery, taking some life-saving decisions, etc. They are very important for us because they are color calibrated because the doctor is actually using those displays to perform the surgery. So yeah, so those are the four segments that we operate in.
So now there would be two questions here. First would be, sir, can you name some of your clientele? And the second one would be, can you just provide the revenue split, as per these four segments and also the sectors?
So without really naming names, we have clienteles who are system integrators for railways and metro authorities in India. There are a lot of aggregators or system integrators who would put the entire system together for the railway authorities or the train set bodybuilders. Those all companies are our potential customers, and in fact, we are already operating with most of them at the moment. Then there are companies who make medical grade surgical monitors, the monitors that you insert in the body to perform surgeries. So we bundle with them, we tie up with them to bundle our monitors with their cameras. And also we have defense contractors or defense system integrators again who use our displays and integrate with their system to supply to Government of India PSUs, etc. So yeah, so that's pretty much the line of customers that we have. Speaking of the revenue mix, we have had about 45% of revenue coming in from the defense and aerospace, wherein we have also been exporting some critical avionics related display products overseas. Around 24% has come from railways and transportation. Around 28% comes from medical and healthcare, and some meager 4 to 5% comes from industrial automation.
So, so like last week when your IPO had got declared, I was looking कि what like ऊपर से मैं आपका company देख रहा था. So on prima facie it looks कि it's a assembling company, but when I went to just for margins, I was like, wow, इतना normal assembly में तो इतना margin होता नहीं है. लोग जितना
True.
gross बना रहे हो उससे ज्यादा आप net बना रहे हो. So I was truly amazed. So my question here is, what gives Highness the edge over other peers? Because some of if you related companies, I don't know about much of your peers, but I'm assuming most would be like importing the kits from the China and then just giving it an assembly. So what gives our company an edge over others?
So, as you rightly pointed out, in fact, all the companies in our line of business or in our segments, they are merely importing CKD or SKD kits from China and just assembling them in India. But that is really not how we operate or how we would like to operate. We have a very strong design capability and design team here. So every product that we offer gets designed in-house, and we very strongly believe on indigenizing the supply chain, indigenizing the ecosystem for this kind of industry in India. So we operate in that manner that we want to do everything in house. We want to reduce the dependencies. We want to reduce the import reliance, and we want to design most of the products ourselves. So it could be even a small enclosure, or it could be some cables, or simple glass going in, but it is all designed locally, designed by our people, capable engineers, and then it is all put together, and then that's how the product is rolled out for us. So it goes through a very stringent, product development process. There is a very strict quality check guideline in place. So all of that put together is what our product carries when it goes out of the factory.
So, like, if I'm getting it right, the moat of our business is first the mission criticality of the products we are making, and the second would be the in-house R&D which we would be requiring. So, my question would be, what is the percentage of revenue are we spending on the R&D, and what is our current, manpower capacity on the R&D part?
So interestingly, every product that has been rolled out has gone through the R&D process. So every product that is sold, there is a percentage of R&D involved there. And I possibly may not be able to give you the R&D figure right now because it varies from segment to segment. However, there is a great deal of expenditure that we do on our research and development. And actually speaking, which is the reason why we have been able to roll out such products, because it is backed by a smart design. It is backed by great engineering capabilities, and most of our people understand this industry. They've been with us for a very long time. They've seen the display industry evolve from for last 10 years or so. So that's how our product mix is placed.
Got it. So, we would like to name any kind of peers we have in the listed space or even the unlisted space?
No, we really don't see anybody who's working on displays from end-to-end product development cycles that we do. We have competition people who are importing from China, we people from importing from other countries. However, anybody who's integrating displays end-to-end like the way we are doing, we really don't see anybody at the moment in India.
Got it. So, I was looking at your supplier concentration. So, we have one very large supplier from the China. I'm not sure if he's an OEM or a distributor or who, but what kind of initiatives are we taking to reduce this, dependence on this single vendor or even the imports, so far?
So speaking of a single vendor that you see in our books, he's not a vendor per se, but he's a consolidator for us. So we buy from various locations spread across Far East Asia, starting Japan, Korea, Taiwan, and China. But we consolidate all these in Hong Kong and then bring in as one consolidated shipment. So that's why you would see that we are buying from one particular supplier, but that's not the case. It's just a consolidation for us. Further, we intend to do a lot of backward integration. There are some sorts of semi-finished display glass that we are buying from Taiwan and China. We want to start making them ourselves. And at the moment in India, the display ecosystem lacks. Even for small things, we are sort of dependent on imports, and which is what we want to change. We want to try and develop the ecosystem locally. We want to try and localize and indigenize everything here, starting with the critical components like glass, moving forward other things like the PCBA or the enclosures, the backlight units. So we are already taking steps in onboarding the right talent and onboarding the right engineering mix, so that everything can be indigenized and we are not dependent too much on imports.
So, two questions here. First is, what idea came to your mind कि, मुझे मेरी कंपनी को IPO लेके जाना है? The first one, and second would be, what are the objects of our issue?
See, going public for a company is once in a lifetime milestone. It not only gives you the bandwidth to operate, but it also gives you, it is probably one of a milestone that you can consider. However, it gives you a very clear visibility, and you are listed in public space. It allows you to operate with great freedom. And speaking of the object of the company, we intend to develop some backward integration processes wherein we are buying TFT LCD glass, which is in technical terms called open cells. Now these open cells are already attached with PCBs, and we import it in that manner. However, going forward, we want to onboard processes like COG, FOG, which is chip on glass and film on glass. These lines will allow us to manufacture open cell glasses ourselves, greatly reducing our dependency on on imports and backward integration. Plus, at the same point in time, we will be able to customize a lot more. We will also be able to do a lot of quality improvement, as well as we will have a better grip on supply chain. So that's one of the objects of our IPO proceeds. Other than that, we will start cutting some of the glasses, which will help us make some stretched and bar type displays, which are largely used in transportation segment in railways and metros. We intend to also pay some of our short-term debt from the proceeds, and some portion is meant for the working capital.
Got it. So what kind of capacity utilization are we working currently?
So at the moment, we are deploying a set of machineries which are semi-automatic, as well as many of the processes are being done manually. And therefore, some of the things are in fact a little costly and non-competitive. So at the moment, we are using around 35 to 40% of our capacity from the existing setup we have. And with, like I said, with the backward integration and with the expansion plans in place, we will have a great set of machinery which will, we will be able to transition from manual and semi-automatic things to largely optimized machineries and automatic machinery, which will help us reduce the cost, increase competitiveness, and we can target to 3x our capacity by then.
Got it. So talking on your margins, we are delivering a close to 40% of EBITDA and 25% of a PAT. So how do you see these margins sustaining? And the second would be our company has, delivered a very robust kind of a revenue growth in the past three financial years. What kind of trajectory do we see moving ahead in maybe a 2 or 3 years down the line? And as the expenditures and all this backward integration and the working capital things go in, do we expect the margins to get slightly diluted, even though volumes and revenues might inch up, but do we expect the margins getting slightly on a downer trend?
So I will answer your last question first and then come back to the first one. So margins getting diluted will only happen when we scale up the manufacturing and we have much bigger capacities installed. That is when we intend to enter into the automobile sector. And when we do that, basically that is a market where it's high volume and low margin mix. So that will happen, but not eventually. I can already see that there are some regulations and certifications required to enter the automobile space. So that what you said will happen, but not immediately, maybe only after a year and a half or so. And speaking of the margins that we have now and sustainability mark on that, so we are already supplying some avionics and aerospace related products overseas. We've had three design wins from APAC region, and another three designs are already in pipeline. So we can already expect some great orders coming in, great numbers coming in next 6 to 8 months time frame. Speaking of the domestic demand, the defense sector already has the biggest budget, and we are already supplying some mission critical displays. These numbers are only going to grow. Railways in India is already on an upswing. As you can see, you can hear that the railways are doubling and tripling the numbers. New trains, new rakes, new metros are already being built up. So again, very bullish on the railway segment. Medical and healthcare, as you know, that private as well as government sector, the spending is at an all-time high, and we have the displays to offer for the Indian condition for Indian market. So again, our expectations on medical and healthcare segment looks very good. So if I put it all together, the defense, the railways, and the medical sector, as well as the export opportunities, I think the order book, the demand pipeline is looks very good for us, and I'm very confident that the kind of margins we have delivered, it is only going to grow.
Got it. So one question would be on your trade receivable part. So I was looking that, there was a I guess 2 or 3 crore-ish, 2.5 crore-ish of a trade receivable which was stuck from 6 months. So I understand that this kind of segment, be it aerospace, defense specifically, or a segment in which we operate, have got a long, working capital cycle. थोड़ा पैसा आने में वक्त लगता है. So, any you would like to put a comment on this receivable?
So, this is a trade receivable which was due for quite some time, but in fact, some tranches have already been received in last month or last month and a half. So, as we can see that, these payments were due, but then the payments have started coming in. So, and in fact, the amount that you mentioned is from the first invoice, but then we've had a repeat order after that. So that repeat order itself shows the customer's confidence in us. The customer has not gone back saying that they will not reorder with us. We, in fact, expect further orders in the coming financial years. And I think in the export market, in the international market, this is how the payment cycles work. And we are receiving our payments as and when they are due. So I'm pretty confident on that as well.
So one question on the Middle East part. So on one end, we are seeing many industries are facing some supply chain risk. So that is obviously, slowing down some kind of a day-to-day operations, which might be any kind of a raw material risk. And the second would be the opportunity which lies, because end of the day, we know, this region is all, going to recover from here, and we know all this segment is also going to see some boost coming in because जो चीजें खराब हुई उनको वापस बनाना पड़ेगा. So on this both part, first is on the supply chain, and second is on the opportunity see lying in like 1 or 2 years down the line.
So it is true that there are some disruptions because of the geopolitical situations in Middle East, but I see that as only short term. Obviously, none of us can predict when this will change. However, I see that most businesses would like to get this behind them and move forward. So I think that this is sort of temporary to medium scale delays. And we are importing our raw materials or our things coming in from Far East Asia, which is largely undisturbed at the moment. So there is no major impact at the moment that we see. We are already sitting in a country which has got a very robust growth. There is a lot of domestic demand in India. So we are sort of safeguarded against these disruptions globally. We feel that India is much better placed compared to the other countries in West Asia or Europe or elsewhere in the world. So yeah, so confidence levels are pretty high. This may possibly just a temporary disruptions.
Got it. So we are seeing a lot of PLI, DLI or state subsidies, on their defense, railways, and the medical equipment space from the government especially. So do we fall in any kind of these schemes, or we feel we can get benefit of anything in the all government schemes or any subsidies?
Yes, exactly. So yeah. So what we as a company we fall into the government's ECMS scheme, which is the Electronic Component Manufacturing Scheme, and we fall in category D, where we can get capital expenditure subsidy. So once our new expansion plan is in place and the machineries have been bought and been installed, we will be eligible to claim those capital expenditure subsidies from the central government. At the same point, our existing facility is in state of Maharashtra, which has great capex as well as other operating subsidies in place. So we stand to be benefited from them, as well as our new expansion facility is supposedly coming in the state of Goa, where again the state government has electronic manufacturing cluster, where we have received a land parcel at subsidized rate, as well as this government also has some capex subsidy, some interest subvention scheme, etc., etc. So as and when the time comes and the subsidies become available to us, we will be applying and be getting them.
So any final message you would like to leave for your potential shareholders?
So my message to the shareholders would be that see, Highness is a rare combination of very high margin engineering company, where we have niche positioning and strong growth tailwinds. which again is driven by defense indigenization and electronics and semiconductor manufacturing in India. And having said so, we have proven execution track records. We have strong order book visibility. We have a very scalable business model, and at the same time, we have a very clear vision of the roadmap as well as capacity expansion. So the company is really very well placed, and we can deliver a sustainable growth from long-term perspective. So therefore, I encourage and invite all the shareholders to come together and be part of this journey.
Thank you, sir, for your time and wishing you all the best for your IPO. I know the current markets are slightly, sluggish and terrible zone, but I'm sure markets are always glad to reward good companies. Thank you for your time.
Thank you very much. Appreciate it.